which I think could be at play. Now, on the surface, tariffs are about fair trade by punishing importers, bringing back jobs, and protecting your own industries. But this theory has less to do with all of that and more to do with the Federal Reserve, interest rates, and the US national debt. Think about the timing, for example. The US economy has been facing high interest rates because of the Fed's fight against the pandemic's inflation. The government debt payments went way up because interest rates are now much higher than they were a couple years ago. In fact, US interest payments on debt are approaching $1 trillion a year. Money that just goes out the door to bondholders. Now, if you're a president who campaigned on debt reduction and economic growth, high interest rates stand in your way. Just think about how Donald Trump has built his wealth. His entire life, he invested into real estate, then borrowed against his real estate to buy more real estate. Some people call it the BRRRR strategy. Buy, remodel, rent, refinance, repeat. Buy, remodel, rent, refinance, repeat. And that can only be possible in a time when interest rates are low. He even said no one gets rich while interest rates are high. So enter tariffs. Tariffs hurt everybody. They raise costs, they scare markets, and they can stop spending and investment. That's a bad thing. Even Howard Lutnick said, the world putting tariffs against itself, of course it's bad.
When we're all equal and everything is free and fair, if you raise tariffs and they raise tariffs, isn't it bad for society? The answer is, of course it is.
But a slower economy can accomplish something. It might send the US into a temporary short recession so that it forces the Federal Reserve to cut interest rates to stimulate that growth, to revive the economy, and to allow people to get rich again. And what else do lower interest rates do? They make it cheaper for the government to borrow and refinance its debt, of which this year there will be about $9 trillion of. Now, all of this sounds almost Machiavellian, right? But it's a theory with a lot of data points suggesting that at least it could be possibly intentional. It's supported at least in part by one of the most legendary macro investors and economic historians of all time, Ray Dalio. You might know